Did you know that the state of Texas has 0 state property tax? We also have 0 income tax. That's why a lot of people are coming here. So if you're watching this, you want to know, like, how are the taxes calculated? What is going on? So I do hear stories sometimes of people that are coming from other states or even people in the state. They're like, why are the property taxes in Texas so high? Well, remember, we don't have income tax. So the taxing authorities probably do charge a little higher for that, but it's still a great place to live. And this video is going to explain how the taxes are assessed, how they are calculated, and what exemptions are possible and what that means for you when you are buying a home in this great state. I'm Jen Hernandez, lender for lots of years, since 1995, so I'll save you the math. That's like almost 28 years at the making of this video. And I love to help homeowners sort the difference between real facts and no BS. So stick around, watch some more videos later. Let's get started. So let's start with the different kinds of tax. So we know that there's no state tax, but the local authorities will assess tax, and then that's all grouped together. Now, depending on what county you live in, you might receive 2 or 3 different tax bills. Some of the counties make it really easy and everything is just boggled into one. So it really depends where you live. Did you know that in Texas, there's over 4,700 local little governments, taxing authorities? Like, that's a ton. Texas is a big state, okay? But there's a lot, so it's a lot to handle. Now, it all is assessed through the county. So all the local authorities rely on the county, and the local county that you live in tax assessor will receive the money, and then they'll disperse it once a year to the taxing authority. So some of those authorities include county, city, if you live within city limits, school, there's always a school district, emergency services, and another big one, especially in new neighborhoods. Now, Texas has a lot of land, and so there's a lot of new construction that goes on here. Municipal Utility District, that's what that stands for. So a MUD is also a large portion of tax, and that really goes to pay for just the development of the area, the development of water. So water taxes are actually really common in Texas, so watch out. So when you're buying the home, the tax rate is going to be listed on the multiple listing service that you're looking for. In fact, on the screen, I'm just gonna go ahead and put a random house. We're gonna look down, and you're gonna scroll almost all the way down. You can see at the very bottom is the good old tax rate, but you have to really scroll down to see it. Now on the phone, it's a little bit different. So when you're on a desktop, that's the view that we're gonna show you today, is just scroll all the way down. So this is the Houston Association of Realtors, the city where I live. This is just an example of where you can find the tax rate. So here's how it works. All of the local authorities, well, actually, it's all governed by the appraisal, the county appraisal district. So for example, in our area, Harris County is a huge county. So Harris County Appraisal District will assess through their office the value of the property as of January 1. So every March, April, they'll send all the homeowners an assessment saying, hey, this is the new year. As of January 1, this is what we assess the value of your property to be. They give you a protest period. They give you a period, it usually is May 15th, that you have to file that you're going to protest. Now, a lot of this is done online now, but every county will send you instructions in the mail, okay? So anything you receive in the mail from a county appraisal district, you need to open it. So there's a protest period in the summer, like May, June, and July. You're going to hearing, you're protesting, whatever that may be. The values are finalized in the summer, and then every November, they're getting, with technology, they're getting a lot earlier now. I think by Halloween, usually the tax bills are out. But in November, the tax bills will go out, and then they're paid in December and January. So you're given a choice of when you want to pay it, but they're delinquent after January 31st. So you're probably asking, how do I protest property tax? How does an escrow account, like how do I pay taxes? So I'll go through that more, and we're also going to put down in the description, I'm going to put those resources for you of how to protest your property tax. If you happen to be in a home right now and you're interested in that, I've got a tutorial about that. And then also we've got some information on how an escrow account works. So let's talk about that next. So when you're in the house, you have a choice of how to pay taxes. Now the lump sum is due to the county and the local, the ISD, the schools and all that. It's always due. They don't really care how you pay it. They just want it to be paid. But you as a consumer, if you have a loan, then you either pay it in a monthly escrow account. Now, if you put less than 20% down, the lender mandates it. So you have an escrow account. But if you put more than 20% down or paid cash, you have a choice. If you pay cash, you pay it in full every year because you don't have a loan. And then if you put more than 20% down, the lender gave you a choice as to if you wanted to pay taxes annually on your own or if you wanted to do it in escrow. So that's how they're paid. I have another video that I'll put in the description about escrow, an escrow account, and how that works. The last thing that I'll talk about actually is exemptions. So that is the good news, is that there's different exemptions that you can have that will give you a reduction in the property taxes that you pay. The first one that's the most common is the homestead exemption, and that is you occupy the house as your primary homestead where you live and put your head on your pillow at night. That's a homestead. So it's approximately a 20% deduction. It's not always, because some taxing authorities don't always allow the 20%, but that's approximate, just to give you an idea. The other deduction that you could have is if you're over 65. Now, only one spouse needs to be over 65 in order to claim that over 65 exemption. So at whatever month in the year, it doesn't matter. You don't need to wait for the new tax year. Whenever you turn 65, go to the appraisal district, fill out a form, and they'll apply that exemption. So that's really cool. The other exemption that you could get is when you're disabled. So there's disability for any medical disability when the government deems you as disabled. But then there's also an additional discount for veteran disability. If you're a veteran and you have 100% disability, you pay 0 taxes. So you have a further benefit when you are a veteran disabled. Now, every tax or every county might have a few differences. So make sure when you're buying a home that you look on the county website and really read about the exemptions. There might be some differences from county to county. Okay, so make sure to check that out. The last exemption that I'll mention is an ag exemption. So there's a lot of land in Texas. There's a lot of rural land in Texas. So if you're buying a rural property and you have farm animals, chickens, or livestock, or you're farming something, you can get an agricultural exemption as well. So if you think that applies to you, check it out on the website in the county that you're buying. Let me hear your comments. I would love to hear your comments. Please stay around, watch another video. I hope you learned a lot today. Talk to you soon.